Hello, my name is Tom Vasallo with MRW Financial Brokerage. I appreciate everyone taking the time to attend this webinar on the asset care products from One America. Give you a little bit of background on myself. I started specializing in long-term care now almost 30 years ago, selling Aetna's original nursing home product, which had 3 days prior hospitalization, covered skilled care only. In hindsight, a fairly restrictive policy. On the plus side, we never had any rate increases. Went through the American Travelers, the Penn Treaties, CNAs, AIGs, Genworths of the world, have had clients calling me with rate increases on the existing long-term care insurance they have, which is never a pleasant call. And, have now taking a look here at these asset care products and these asset-based products, especially with One America, and it really answers a lot of the problems traditional long-term care has had in the past. Right now, if you're looking to generate new activity and acquire new clients, we're in a perfect storm right now for long-term care. We have an entire generation of people, over 75% of people have never talked about long-term care with a financial advisor, even though over half of them admit that virtually everyone will need long-term care, and over half of them have had experiences in their family with long-term care. And the reason is the people that should be talking about long-term care, the financial advisors, the retirement advisors, have stayed away from the product because of its use it or lose it features for long-term care. It might be better to just self-fund a risk for long-term care because there's been a significant history of rate increases and because you can't purchase a lifetime benefit anymore. Well, with these asset care products, all of that has changed. Premiums are guaranteed. If you don't use it for long-term care, there's still a benefit that creates leverage and goes on to your family members tax-free. And there is a lifetime benefit. So with that, let's go ahead and get started. One of the things One America is great about is putting together workshops and advertising material. If you email me, I'll give you a website you can get to that will get you access to a lot of the marketing material, social media posts that have been approved, things like that you can use with your clients right away. This is one of the workshops on asset care that is client approved. I just wanted to take you through this real quickly. Your clients have spent years dreaming about their retirement, traveling the world, spending time with grandchildren, enjoying new and old hobbies. You may have put together a retirement plan, or their financial advisor put together a retirement plan and took those things into account. How much are they going to spend golfing, their hobbies, how much are they going to spend traveling. They've accounted for gifts for their grandchildren and spending time there. And many times they haven't, because they haven't had a solution for it, they haven't modeled into that retirement plan the need for long-term care. Well, what if there was a product out there? One of the things you have to ask your clients is, if you needed long-term care today, how would you pay for it? If you had to start writing a check tomorrow for long-term care, how are you going to pay for it? Is there a CD? Is there a money market? And how much is in there? They may identify, well, I have this money market. It's sort of a rainy day fund. We have $150,000 in this money market. That's where I'd go to first. And okay, when that money market's gone, what are you going to move on to next? And when you move on to those other assets, is that going to start to impact your livelihood? Is it going to start to impact the retirement security of your healthy spouse? What if there was a product out there that gave you access to 100% of the death benefit for long-term care? And we see that all the time. That can provide cash value growth, that can provide a return of premium. So we're talking about just moving money from the right pocket to the left pocket. And if you need it for long-term care, provides a lifetime long-term care benefit. If you pass away without using it for long-term care, provides a tax-free death benefit. And that's what we're really talking about with asset care. It allows your clients to control when and where they receive care. It's going to pay for all levels of care, home health care. If you need additional assistance in your home with adult daycare or respite care, it of course pays for that. Typically, the next step on a care continuum is an assisted living facility. It'll pay for that. And, finally, more of end of life is that daily skilled nursing facility. But it allows you to protect your family and loved ones. We have a workshop that's been developed by One America for women in long-term care, because when we talk about protect your family and loved ones, that's what we're talking about, even if you can self-fund the long-term care. A long-term care event rarely disperses evenly among your children. You may have children that live all over the country. My particular situation, I have a father-in-law that's got some issues right now. He has 2 daughters and his son. One daughter, my wife, lives in Sarasota, where he lives, as well as his son. His other daughter lives in Atlanta. As he's needed care to take care of him, it hasn't fallen equally among the children, and it's creating, some resentment on who's having to do what. It allows your clients to maintain their independence and preserve their assets for the beneficiaries. If we can put together a plan to fund long-term care and where your clients want to receive care, then their loved ones, their family members, aren't having to make that decision without any guidance from the individual that needs care. We can help you build a customized strategy that works for your client's situation. We have both single and joint protection available. Yes, we have a joint policy that will cover both husband and wife, 2 people living together. They don't necessarily have to be married. We can cover siblings. We can cover a parent and a child on one joint policy. We have benefits that are available using a 2, 3, or 4% acceleration rate. So we can dial to some extent how much death benefit is there or legacy value versus long-term care value. There's inflation protection that sometimes makes sense on some of these. And most importantly, there's a continuation of benefits rider. So once you exhaust that base policy for long-term care, that monthly benefit is going to be continued to be paid beyond the death benefit, and we can offer up to a lifetime benefit period. So there's a true lifetime benefit. You don't have to worry about exhausting your healthy spouse's care. Now, here's sort of the concept of it. I was battling with financial advisors for years that said, you have enough funds to self-fund long-term care. You don't need to purchase long-term care insurance. So one of their big objections was, what if you pay premiums all these years and you don't need it for long-term care? It's use it or lose it for long-term care. Let's just self-fund it. And most people and most advisors, have assets split up in, the conservative, the money markets, the CDs, the moderate risk, maybe some bonds, some fixed annuities, and then the more aggressive risk where you're getting into the equities and the international funds. Typically, the financial advisor and the client is going to go to those conservative funds first. Oh, sorry, skipped way forward. Typically, they're going to go to those conservative funds first to fund the long-term care risk. So let's say they mention that $150,000, or in this case, $125,000 they have in a money market or a CD. The problem is, what are you going to move on to next when that $125,000 is gone? At a rate of $5,000 a month, $125,000 is going to last for 25 months. And if we're talking about a couple, that's a combined 25 months for the couple. What if we could turn that $125,000 into a $250,000 death benefit and long-term care benefit for your kids? So let's create the leverage on the $125,000, turn it into $250,000 for long-term care, and this is what really makes it unique. With that continuation of benefits rider, turn that into a lifetime long-term care benefit that will continue to pay $5,000 a month. And at the same time, we can keep that $125,000 completely liquid. If they want the money back in 6 months, they can get the money back. If they want to borrow against the cash value, they can borrow against the cash value, and as long as the loan is repaid before they go on claim, all the benefits will be restored. So it provides a great solution. You've got the cash value, you've got the death benefit as well as the long-term care benefit. One of the unique things that's really unique about One America, and that's the Asset Care One. It is a single premium policy. Issue age is 35 to 80. A lot of the asset-based or hybrid long-term care policies have a minimum issue age of 40. We'll go down to age 35. The Asset Care One must be funded with non-qualified funds. So that's a single premium option funded by non-qualified funds. We also have the Asset Care 2. I was just reviewing an application today that someone brought in. They are funding it with two whole life policies. It's a joint policy on a husband and wife. So we have a mechanism to take individual whole life policies or individual annuities, 1035 it over into a policy that is eventually going to fund a joint long-term care benefit. So it provides a great option as well. The Asset Care 3, and those are for non-qualified annuities or life insurance. The Asset Care 3 is for qualified funds. You have to be above age 59 and a half for the Asset Care 3, but we have a mechanism to fund the long-term care benefit with qualified funds. And something else that's unique to One America is the ability to fund it over a lifetime pay. Now, we can do a 10 pay if someone's going to be working 10 more years or 20 more years and they want it paid up for before they retire. But we can also fund it to age 100, a lifetime pay. And that's going to compete with your traditional long-term care policies. What's really interesting is if you compare apples to apples, and I mean a continuous pay One America policy with a lifetime long-term care benefit to the competition out there of traditional long-term care policies, and you match the elimination periods, which is 60 days, you go to the longest benefit period that they have, you add the shared care or the restoration of benefits if the policy has it, because we're competing against a lifetime benefit. For a couple, more often than not, the Asset Care 4 is actually going to be less premium than the traditional long-term care policy. The differences are, A, we have a lifetime benefit you can never outlive. B, we have a death benefit that comes back if you don't use it for long-term care that's tax-free. C, and probably most important, the premiums are absolutely guaranteed to never change. Benefits are guaranteed to never increase. And D, we have a cash value that if they do want to surrender it in the future, there is a cash surrender value for them as well. So that Asset Care 4, when comparing it to traditional long-term care, is a tremendous advantage. I mentioned briefly the continuation of benefits rider. All of these policies on the Asset Care series are built on a whole life chassis. The first, third, 25, 33, or 50 months, depending if we go with a 4%, 3%, or 2% acceleration rate, are paid out of the death benefit. So a monthly benefit is paid, the death benefit is reduced dollar for dollar. Now, we see that on a tremendous number of life insurance policies out there. What makes the Asset Care unique is that we have a continuation of benefit rider that's actually issued under a separate policy number, and it's filed as a tax-qualified long-term care insurance policy and maintains the tax-deductible characteristics of a qualified long-term care policy. And that is going to extend that monthly long-term care benefit out to a lifetime benefit. And that rider is non-cancelable, meaning premiums cannot increase. The rider benefits cannot be decreased. So it provides permanent protection for your clients and a firm contractual guarantee that rates will never be raised, something that we've never had in the market and been able to offer before. So if you do have some questions, we have a complete workshop put together on how you use the conversation of long-term care because clients are interested in learning about long-term care. There's a pent-up demand, and how you transition that into a retirement planning conversation to help you gain assets under management, make annuity sales, and of course, what I'm interested in is, the long-term care solution as well. So please feel free to give us a call. Once again, my name is Tom Vassallo, And I thank everyone for taking the time to review this webinar with us. Have a great day.